Hi there traders, and welcome to this week's video blog. I hope you are well. This week we're going to concentrate on just having a quick market scan, very short and sharp this week, purely because there wasn't much going on last week to talk about, and that is to be expected after quite an active January, lots of volatility. You often get a patch where the markets start to either enter retracement phase or go a little bit stagnant. So when that happens, it's a good opportunity to really take stock, to do a bit of learning, to review your trades, and to take a bit of a breather, because we all know that there is an element of pressure in trading. When you're trading your own money, you do feel this pressure, so it's nice to have a period where you haven't got as much going on, to just relax and take a breather, take stock, and prepare yourself for the next flurry of activity, which is no doubt likely to take place in the next week or so, because often after a bit of a barren patch in terms of activity, it then picks up and we get quite an active period. So now's the time to really start planning and having a look ahead. So we're just going to flick through the markets and have a look at what looks interesting, and all I'm going to do is just go through them and see if I can find a bias in terms of direction. Is the chart giving me enough evidence in terms of whether I want to have a bias to the buy side or the sell side, or is there no bias at all and it's mixed? That way we can start to construct a shortlist of pairs that we want to concentrate on for the week ahead, and pay a little bit more attention to those particular asset classes. So we're going to quickly flick through, and we're going to see if there's any particular bias. And this is something I do every single week, a bit like the video last week where we're looking to preempt a move before it happens. But today all we're going to concentrate on is, can we find a bias on a particular currency pair, and if so, can that go onto our watch list for the week ahead? So we're just going to flick through. I'm not going to go through everything. I'm just going to go through the majors, minors, and some cross pairs, just to give an illustration of what this process involves. And it's very simplistic, not too difficult, but can work wonders for your trading, because it again makes you proactive as possible before the trading week has even started. So first of all, we're looking at the Great British Pound here. Now, it had come down to a pretty nice horizontal level, so we saw some reactions to resistance just here back in October, support back in December, and then last week we came back down to that support level. However, I wasn't that interested in trading it because it was quite mixed for me, because we'd put in a new high through January, but then put in a new low at the start of February. So the cyclicity and the trend was a bit mixed for me. Also, there was no clear divergence to suggest a strong move up. Now, the market has pushed higher, but for me, it's just not strong enough yet in terms of a one-directional move. So I either want it to break the high and carry on its strong uptrend, or form its first lower high before I then start to look for potential short opportunities. So pound is just a little bit mixed at the minute. The euro, again, a similar scenario here, a little bit mixed. We are getting a new high followed by a new low, followed by another strong move up. No clear divergence here because we've created a new low on the price action. We've also created a new low on the stochastic. So if I did have any particular bias, it would be to the downside. But I'd probably want to see another lower high kick in before I confirm the next leg down. So that would then give me the lower low and the lower high to confirm the strong downtrend in conjunction with the stochastic convergence. So for me, with pound and euro, it's probably just waiting another week before it gives me further confirmation in terms of the direction it wants to head in, before I'm then in a position to look for trading opportunities. The yen looks interesting. We have seen some rather choppy price action, but we can still see the lower highs and the lower lows. We are getting convergence still to match the new lows, but what's quite interesting is that price has popped up during last week, but this area here is still lower than its previous low. But if you look at the stochastic, it's actually putting in a higher peak there in regards to its previous one. So this is actually what we call hidden divergence, where the price is putting a lower high and the stochastic has put in a higher high. So that is an indication that the trend wants to continue. So we'll be looking for opportunities. Well, I'll personally be looking for sell opportunities, because I have a bias to the sell side. There is quite a nice horizontal here where we had support, them resistance, and that also coincides with the 50 moving average. So be monitoring this particular area here quite closely during the next week and see what happens. But certainly my bias is to the downside, so looking for sell opportunities on dollar yen. That is going against the threat of the potential government intervention. However, the technicals are saying to me that the highest probability of success is to the downside, which is why it's really, really important that with the stop loss management, as soon as we get to that 1% profit, bang, stop losses go to break even on position 2 to make sure that we protect ourselves at all times. Dollar Swiss should really be a replication of the euro. It should be the opposite scenario, but it's actually giving us a little bit more clarity in what it wants to do, because we've had the new low, we've had the lower high, so now we've got confirmation that the market wants to head lower. So it is really mid phase 1. We've got this beautiful confirmation on the stochastic that the market is converging still. We've seen the turn and the market is moving down strongly, so certainly the bias here is for sell opportunities, but as it is mid phase 1, no real opportunity for me to get in, because we want to be getting in at the turning points, the pivots in these market cycles. But if it breaks this low here and carries on converging, then we'd expect price to really get down to this support level just down here, and that's where we'll be looking for potential reversals. It looks like the market's starting to range, the moving averages are flattening out, the price action isn't really giving us dominating trends, so it'll be quite interesting to see if this breaks the low, comes down to this region here around the 8840 level, and whether we get convergence or divergence. Because if it gets down to here and we get divergence, that will definitely be a nice opportunity to take a buy position there. But for now, bias is sell. Can't really take an opportunity because we're mid phase 1, but there isn't a nice zone there of where we could potentially take a buy opportunity if we got a sign for a reversal, just like we did here, where price came down, broke its previous low. So this here came down, created a new low, but look at the difference in the stochastic, higher low. Massive divergence, inside bar, beautiful push higher. So we'll be looking for a similar scenario to that. It's going to take a while to get there, but it's on our map, it's in our watch list. We're almost preempting what we want to happen 2 steps in advance. But for now, sell bias, but that may change to a buy bias in due course. Kiwi dollar. For me, such a shame. I know you can get too affectionate with the currency pair. I did have high hopes for this, really heading up to the 8800 level as previously discussed on blogs in the past, but it really didn't fulfill itself, unfortunately. But that's the way the markets sometimes are, and the market really has gone into a complete sideways range without any key landmarks to trade off. So it's just a mess for me. I can't see any clarity in what it wants to do, so I'm just going to leave that alone. Very mixed. Dollar CAD. Dollar CAD, you cannot argue in terms of the trend, a humongous push higher. Now, what's quite interesting is the price action on the way down. It's had its retracement, as we were talking about right at the start of this video, but the retracement is very, very weak. It's not aggressive. Most of these bars on the way down have been low test bars, and they're very, very short and sharp. What's really, really interesting is that we've got this hidden divergence. You can see that the market has gone from oversold territory to all the way down to overbought territory. So for me, it looks like there is a potential for another leg higher, because we've had such a strong move down. It's almost reset itself, ready for another leg up. So be looking for opportunities on the buy side for dollar CAD, which means obviously Canadian dollar weakness, because it'll be dollar strength, Canadian dollar weakness, and that will play into some of the opportunities that we're going to discuss in due course. So if that happens, then other opportunities may happen in conjunction with that. The Aussie dollar was the one trade that unfortunately didn't fulfill its promise off this level of support, which became resistance. It did push a little bit lower, but has since retraced off the back of some divergence. It has come back to a level of resistance, as we're seeing here, these key levels here. We have got hidden divergence, so my bias is to a potential sell opportunity. Let's come back to the 50 moving average as well. My only concern with trading this is this significant level here. It is quite an obvious roadblock that could prevent you from obtaining a decent profit. So what I'll be possibly looking for there is a close below this level here before considering a sell opportunity, even though it does look quite interesting now, hitting its head off resistance with hidden divergence suggesting another move down. There is a bit of a a roadblock there that could scupper our plans in terms of getting a nice return on our investment there. Euro GBP, that was another one. I know we looked at this last week and we were planning for a move to head down to this bottom of the channel here. Didn't happen. Headed back up, and it's now doing the opposite and coming to the top of its channel. So we have quite a nice landmark for where we want to see price to come back to. I don't know what the Fibonacci retracement is from this big high here down to this low. Oh, it's actually tying in with the 618, so that's quite interesting. Hasn't quite yet hit this level here, so it'd be nice if this week we get a further push higher, we get some divergence kick in, or it has another pullback before then having another thrust higher to give us that divergence that we want to see. But definitely a key landmark up around this area. Hasn't quite got there yet, but we do have our landmark in place for a potential sell opportunity. And then what we were discussing last week may happen in 3 or 4 weeks time. Now I know that may, as a day trader, seem like a long way away, but it's still a sign for us to potentially take a long opportunity in a few weeks' time from down here. And people often become surprised with how I have a watch list for sometimes 3-4 weeks in advance. But really, if we can have that watch list, irrelevant of when that opportunity is going to arrive, we just want to make sure that we don't miss it when it does arrive. So having it on your watch list, your short term, medium term and long term, is always a good idea as well. So that looks quite interesting for a potential sell opportunity at the top here, or a buy opportunity at the bottom here. Again, use your tools, use your skills, use your learnings to decide on when that time comes for the potential turning point in the market. Because if we get a similar move to what we got in November and a similar move to what we got in December, it should help us obtain another profit from this trade to collectively add up to our 12-month performance. So that's Euro GBP. Euro CAD looked quite interesting. This was talking about how we're playing on the Canadian dollar weakness. This has had a nice retracement, but what's quite interesting is it's come back down to its previous high. So even though this is quite a weak cycle, it's still a cycle where it forms a high, pulls back before thrusting up again. It's actually come back down to that level. And what do you notice about these? Almost these bars standing, or this candlestick standing like soldiers. Something's holding that up, because it's tried for 5 trading days to break that low. It has failed on all 5 occasions. So it's looking for a potential buy opportunity. And the nice thing about this as well is we also have some very significant hidden divergence, which is a precursor to a continuation of a trend. Is if we look at this low here, and then we look at the most recent low, we've certainly created a higher low. This is higher than this one here, but look at the now turning point on our stochastic. This is much lower than its previous one, hinting that the move is likely to continue. The trend is still very, very strong, and trading with the trend is a higher probability of success than reversals. However, reversals do often give us the larger returns when they do work out. So buy potential on the Euro CAD, taking into account what we looked at on the Canadian dollar itself, looking at the potential Canadian dollar weakness over the next week or so. So that looks quite interesting just there. It may drop a little bit lower, who knows, it may go back to the 50 moving average, but keep your eye on it. It's one to watch. Pound yen was looking quite interesting, almost a carbon copy of the dollar yen, so either or, but I quite like this because the cycles are very clean. We've definitely got stochastic convergence, so it's suggesting that the market wants to continue heading lower. Now Friday finished as a very strong buyer bar, so no key reversal here, but quite a nice horizontal here. We've got the 50 moving average, we've got a level of support becoming resistance, so the next few days this may provide a turning point. So we'll keep our eye on that, but it's very similar to the dollar yen, obviously, because it includes the yen. So either or, the trades are both strong potential setups, but we still need to wait. We can't take the trade now. We need to wait for price to enter that zone and then give us that price action reversal sign before considering. So again, utilize your skills, your rules, and your trading experience to know when the timing's right. And then finally, we're going to finish with the pound CAD, again utilizing the understanding of the general bias towards Canadian dollar weakness. which should hopefully translate into a strong opportunity on the pound CAD, because we've got this similar setup to the Euro CAD. We've had price come back down to a previous level of resistance just here, come all the way back down, and then we've seen price, you can see in the candlesticks the price action, almost the brakes have been put on there, because it's had a big thrust down, big thrust down, big thrust down, and then low test, low test, low test, low test. That there is a sign that the brakes have been put on, that something or someone, i.e. buyers, have held that price up and don't want it to go any lower. So we're waiting patiently for a break higher. And the stochastic is also giving us that lovely hidden divergence. Now, we did get divergence. Don't get me wrong, we did get divergence to the upside, and that could have translated into a nice trading opportunity, selling it all the way back down. But we've reset ourselves because we've come from overbought down back into oversold, and we're waiting for that next leg higher. Again, you cannot argue with the trend here. I don't know if we've got a trend line somewhere. So if we bring that up, yeah, if we bring it through the closing price, we can see that price is respecting this trend line. So again, that trend line support is also coinciding with this horizontal level, so a very, very nice zone there. Hidden divergence, price action is very, very strong. Lots of signs there that the market wants to go higher. Is there guarantees that it'll do that? Absolutely none. Is there a high probability of success? Yes, there is. And do we have positive reward to risk on our winning trades? Absolutely. So those trades that go and do as we expect generate us 2, 3, 4%. The ones that go against us knock away our predetermined risk of 1% or whatever your risk may be. So I'm going to wrap up there because I wanted to keep it very short and sharp, but I hope that's helped in terms of the process that I personally go through every single week, in terms of giving me a bias on direction, giving me a focus on a certain amount of currency pairs, because as you can see down the left hand side here, we've got a great number of currency pairs. I don't want to concentrate on that many pairs. When I have to think about more than 2 or 3 things at the same time, my brain starts to shut down. So the fact that I can use my skill set to shortlist those asset classes that I monitor is a very, very good thing, because it then means I become a master of several things rather than a jack of many. So it's really, really important. Get your focus for the week ahead, be as proactive as possible, and when those opportunities come to fruition, get your trade on and then manage it as best as possible to either reduce your risk on a trade or squeeze as much profit out of that trade as possible. And never see a losing trade as a bad thing. Trades will go against you, so long as you risk manage, so long as you follow your rules, then you'll be absolutely fine. So I will wrap up there. I wish you well for the week ahead. Again, any questions you have, please let me know, and I'll be more than happy to answer them. I'll speak to you very, very soon. All the best.